All right, let's talk about Palantir. If you're holding this stock, man, this past week was probably a nail-biter, right? After this incredible run, the stock just hit a wall. It's easy to get spooked when you see those red numbers, but hey, let's not hit the panic button just yet. Today, we're going to dig into exactly what happened, why it happened, and what it all means. We're going to cut through all the noise and figure out if this dip is a red flag or maybe, just maybe, an opportunity. Okay, so let's get right into it. To help us unpack all this, we've got our market expert with us. Hey, thanks for being here. So look, I'm staring at my screen and I'm seeing two totally different stories. On one hand, Palantir is up a crazy amount for the year, but then bam, it just took a nosedive this week. I'm hearing about these huge new government deals, but then I'm also hearing about security problems and, trade wars? It's confusing. Can you just connect the dots for us? What is actually going on here?
You've nailed the problem perfectly. It's this classic tug of war between a really powerful growth story and some pretty harsh market realities. To really get why it dropped so hard, we first have to look at why it climbed so high in the first place. So let's start with the good stuff, the bull case, because honestly, it's a very, very strong one.
Okay, first things first, just look at this number, plus 142%. That's the year-to-date return. Let that sink in. This isn't some tiny penny stock we're talking about. This is a major company that has seen its value just explode. You just don't see a surge like that unless there are some really powerful engines driving it. And it's not just hype. It's been fueled by how the company is actually doing.
And that's the key, right? The hype is actually backed by real numbers. Take their last earnings report. Wall Street was expecting them to make about 14 cents per share. Well, Palantir came in and beat that, posting 16 cents. And it's not just about what they did in the past. They also raised their guidance for the whole year, which is basically them telling the market, hey, get ready, because we expect this strong growth to keep on coming.
Okay, so they're making money, they're growing like a weed, got it. But where's all this coming from? What does Palantir actually do that has Wall Street so fired up?
That is the million-dollar question, isn't it? Think of Palantir's business like a massive two-engine jet. The first engine, about 55% of their revenue, is government work. This is their bread and butter. We're talking long, stable, super high-value contracts with groups like the Department of Defense. But the second engine, the other 45%, is what has investors really buzzing. That's their commercial business. And believe it or not, it's growing even faster than the government side.
And don't think that government engine is just idling. It's landing monster deals. Just look at some of these recent wins. We're talking $385 million with the VA, a massive £1.5 billion deal with the UK's Ministry of Defence, and another $64 million with a key defense agency. These aren't just one-off projects. These are deep, long-lasting partnerships that lock in revenue for years and years.
So here's the kicker. All of this, the government contracts, the commercial growth, it's all happening inside this giant, unstoppable wave called the AI boom. According to research, the AI market is just set to explode. We're talking about it growing almost 36% every single year. By 2030, it could be a nearly $2 trillion industry. And Palantir, they're positioned perfectly, like a surfer catching the perfect wave, right in the middle of it all. They provide the exact kind of data software that everyone, governments and companies, desperately needs.
Wow. Okay, that all sounds absolutely incredible. Honestly, it makes me want to go and buy more shares right now. Which brings me right back to where we started. If the story's that good, why in the world did the stock get hammered last week? What am I missing here? What are the risks?
And that, right there, is the puzzle every single Palantir investor is trying to solve. We just laid out the bull case, and it's fantastic, right? Insane growth, rock-solid contracts, a huge AI tailwind. But the bear case is just as real, and you have to understand it. It really comes down to two big things, a sky-high price tag and the fact that it's super sensitive to any bad news or market shocks.
Let's talk about that price tag first. This number, over 400, is its PE ratio. Now, don't let the jargon scare you. All it really means is this. For every single dollar of profit Palantir makes right now, investors are willing to pay over $400 for a piece of it. To put that in perspective, a typical big, stable company has a PE of maybe 25. So what does a number this high tell us? It tells us the market expects absolutely gigantic growth from Palantir. The stock is what we call priced for perfection, and that means there is zero room for error.
And when you're priced for perfection, even a small stumble can feel like falling off a cliff. And that's exactly what happened last week. It was a 1-2 punch. First, on October 4th, a report from Reuters comes out. It mentions a memo talking about a very high-risk security flaw in an Army prototype that uses Palantir software. Boom, the stock drops 7.5%. Then, just a few days later, a totally different problem hits. The US announces huge new tariffs on China, and the whole market just goes into a tailspin. And what gets sold off first in a panic? High-growth tech stocks. So Palantir got hit again, dropping another 5%.
Now, it's really important to separate those two things. The security flaw story, okay, that was a Palantir-specific problem. It directly related to their tech, and it scared investors. But the tariff news, that had almost nothing to do with Palantir itself. They barely do any business in China. That drop was all about broad market sentiment. It was fear. When the whole market gets scared, investors dump what they see as their riskiest bets, their highest-priced stocks. Palantir just got caught in that dragnet.
Okay, wow. This is starting to make a lot more sense. So what we have is a fantastic company, growing like crazy, but its stock is priced so high that it's basically a lightning rod for any bad news or market panic. So for someone like me, just a regular investor trying to figure out whether to buy, sell, or just hold on for dear life, how do we wrap our heads around all this? This table pretty much sums up the whole debate, even among the pros on Wall Street. You see, in the short term, the bulls are looking at this drop and thinking, this is a great buying opportunity. The market is overreacting. But the bears are saying, whoa, hold on. This thing is way too volatile. It could fall even further. Then you look at the midterm. Everyone agrees the growth drivers are real. AI, government contracts, all that. The big fight is over whether the stock's price already reflects all that future growth. And long term, the bulls see a stock that could multiply in value many times over. The bears, they worry about new competitors down the road and whether Palantir is too dependent on government money. As you can see, there is no simple, easy answer here.
So, when you boil it all down, this is the core of it, isn't it? You have what could be a truly game-changing company right at the center of the whole AI revolution. But it's trading at a price that leaves absolutely no room for mistakes. It's like buying a ticket to a rocket ship, but you're paying a price that assumes it's already landed on Mars. That's the tightrope every investor has to walk here.
Exactly. And that really brings us to the final and most important question. And this is a question you have to answer for yourself. We've walked through the amazing bull case, and we've looked at the very real bear case. You get the growth story, and you get the valuation risks. So the ultimate decision comes down to you and your own investment plan. Is Palantir's incredible future promise worth the very real risk you have to take on at today's price?